Let's go to Intel, Pat, and you and I could either or riff. Do you want to jump in first on this one, just because I don't want to hog the show?
No, I can jump right in. I mean, they had stronger than expected start to 2021. They exceeded their January guidance by like over $1 billion in EPS by 29 cents. That one of the things that I think weighed on the stock were the numbers for Data Center Group that were markedly down. Now, if people paid attention to the earlier call, they would have recognized that. Well, first of all, the company doesn't break out DCG and CCG. So, but if you look at the overall number, Intel had this baked in, and there was also, there's 2 or 3 financial analysts who go and do their spreadsheets. They do break it out, and there's this $500 million allocation that was discussed that I believe those financial analysts put it in the wrong bucket. So what they concluded that DCG missed their numbers, and it's weighing heavy on the stock. I'm always looking at ASPs, Daniel. I mean, if there's at the end of the day, what communicates the strength of your product line are ASPs, and both DCG and CCG were down. CCG, to me, I think were driven primarily by Intel going after the low end of the market that is exploding with COVID, whether it be Chromebooks or low end notebooks. DCG to me was a similar mix shift, but I also think, and we'll see when AMD releases theirs, potentially weighing competition came in and is finally starting to impact DCG.
Yeah, there's a lot to cover here too, Pat, and 6 topics, 5 minutes. This one could be a 45-minute conversation, but you mentioned a great point with the ASPs. A couple things that caught my attention. One was the continued strength of client and notebooks in general. 54% up on the notebook business, 38% across the whole PC space. Like you said, a lot of lower end, and a lot of people are kind of holding that against the company. But I look at that as wins are wins, growth is growth. That's the most chips in a single quarter for notebooks, I believe, ever for Intel. So that was good. You hit it head on with the DCG number, Pat. You also have to remember last year there was a windfall result. So everybody's looking at that year over year number being down, but this quarter, same time last year, the company had a blowout number. So it was kind of it was a little bit of a unicorn type of event last year. So the number isn't as much bad. So you take that 500 million incorrect bucketed, and then you take the fact that the result a year ago was kind of abnormally good, and you say the actual number was pretty solid. We talked a lot, Pat, across this whole quarter because of Pat Gelsinger joining, IDM 2.0, Xeon 3rd generation launch. We're seeing the company's 10 nanometer products hit the market. We're hearing about the 7 nanometer plans. We're hearing about foundry services. We're hearing about manufacturing coming back onshore. So we've talked a lot about it, but this, again, it kind of goes back to what I said about IBM. It's not an overnight thing. It's not just like you're going to have one night and all of a sudden Pat's going to come in and say something great, not you, Pat, the other Pat, and then everything's going to just be on track. Not how it goes. A couple other small notes, Pat, of strength. Mobileye had a really good quarter, 48% growth. And then the last thing was IoT saw a little bit of growth too at about 6%. So a couple other adjacencies, and that's a real important thing for Intel, is that in the adjacencies that it's growth, it's not just data center chips and PC chips, but it's really all these other data centric technologies that the company is focusing on.